Hey guys, welcome to another episode from Vegas Talks. Now, as promised on Wednesday, that I'll explain option chain analysis in simple and efficient way. So here I am with the video. Please note that there might be some technical terms used in this video, but be assured I will try to make it simple for you to understand and incorporate. As usual, before we start, a disclaimer: this video is only for educational purposes and we do not provide any tips or recommendation. I also urge you to forgive if there is any human error made by us. You can share your valuable feedback and we will definitely work on it. I would also like to thank all new members who joined this channel recently and commented for this video. There were few who have commented but have not yet subscribed to this channel. I request them to subscribe and hit the bell icon to get notified as soon as a new video is uploaded. So let's start today's video. Remember, this video is really very important, so make sure that you keep yourself in a good frame of mind and listen to each and every words that I will explain. So what is option chain and why we should analyze option chain? Is it important? Well, let me explain and then I'm sure you will be able to answer this question yourself. Let's try to understand in detail. Option chain is a data provided by exchange which shows the number of trades involved, volumes traded or is being traded, strike price, last trading price, intrinsic value, open interest, change in open interest, etc. Remember, this data is not static and is updated by NSE every seconds during market hours. Now, why we should look into it? While studying the data, we can identify the sentiments of the market. You will say, what? Am I kidding? No, I am not. The data that you see on the screen has many hidden information in encrypted form and we have to decrypt or uncipher it as per our requirements. I will go slowly so that you can understand, grasp easily. If the video is lengthy, then we will break it into 2 or 3 parts if required. So first of all, let's try to understand the header of this chart one by one. First is open interest. It shows the number of quantity currently traded under this underlying asset. For example, we are using Bank Nifty. We also have option change for Nifty and Fin Nifty. The total number is in lots. So if I have bought one lot of Bank Nifty from you, then the count will be 1. Remember, here I have bought a call, so I am a call buyer and you are the call seller. Simple. Now let's see the second column. Second column talks about change in open interest. This shows the number of quantity exchanged from the last trading session. It can be a positive as well as negative figures. For example, if yesterday the open interest was at 50,000 and today if it is at 40,000, then the change of open interest will be minus 10,000 and vice versa for positive figures. Okay. Now next column talks about volume. Volume means total amount currently traded. It's simple: open interest multiplied by lot size, which is 25 for Bank Nifty and 75 for Nifty. Now next column is IV. IV stands for implied volatility. We will not cover this today, but some good to know information. IV is a rate at which option price changes with respect to its underlying assets. Let me explain you with an example. Intrinsic value is just like the accelerator in your car. The more you press, the more it accelerates the speed of the car. Here U means Nifty or Bank Nifty price and car means options premium. So if Nifty has increased by 1 point and intrinsic value is also at 1, then option premium will also increase by 1. If intrinsic value is 2, then option price will increase by 2, and so on and so forth. Okay, if you are still not getting it, then don't worry, I will cover this in our next option chain sequel. Now let's understand what is LTP, that is last traded price. This is the price at which a particular strike price is trading. So this is actually the current price. Change in price is shown in percentage, that is the next column. Bid quantity, bid price, ask price and ask quantity we will cover in our next episode, and it is not important in today's discussion. And in the center you will see strike price. So today we will try to identify the sentiments of the market by analyzing option chain, and we will not use the column which I have not explained it to you. Okay, and remember, right hand side data is for call and left hand side data is for put. I am extremely sorry that I could not bring it all in one screen. I had tried it, but the figures were very small and difficult to recognize. So now Bank Nifty has given a closing at 34,606.90. So let's go to the strike price, 34,600. So here it is. At the money strike is 34,600. Above 34,600 strike prices are out of money, and below 34,600 strike prices are in the money. Okay. Similarly, on the put side, it is opposite. 34,600 strike price is at the money. Above 34,600 are all in the money, and all strike price below 34,600 are out of money. Simple. By now, if you are struggling, then please comment and I'll get back to you. Now, first we will try to find resistance on the call side. For this, let's look at open interest column and find out maximum open interest near 34,600 strike price. In this case, at 35,000 we have 46,741, right? And change in open interest is at 23,475. Then we have strong resistance at 36,000 strike price, where we can see open contract of 42,515 with a change in open interest of 18,092. So it clearly indicates that 35,000 is resistance 1 and 36,000 is a strong resistance 2. Now let's find out support. At 34,500 we have 22,771 open contracts, and change in open interest is at 21,427. Then at 34,000 we have 34,134 open interest with addition of 26,088 new contracts. So 34,000 is a strong support zone. Then we have strong support at 33,000 with 40,730 open contracts with a addition of 13,245 today. Now from this option chain we found support and resistance. Let's look at it again and cipher the trend. Resistance 1 is at 35,000 with a total open interest of 46,741. Resistance 2 is at 36,000 with a open interest of 42,515. Similarly, support 1 is at 34,000 with an open interest of 34,134, and second support is at 33,000 with an open interest of 40,730. So it is assumed that market is bearish because resistance is stronger than support. So bigger players or call writers, those who sell contracts, will not allow the market to go up, because if it does, then there will be a heavy loss. This concept is almost right most times, maybe 7 out of 10 times. But now during market hours, if you see change in open interest figures in negative, then you should buy that strike price. Buy call if you see negative figures on the call side. Buy put if you see negative figures on the put side. I am saying about negative figures means change in open interest figures. So looking at this option chain, you can identify the strike price which you can buy and continue to hold for a longer period of time. When you see unwinding at the strike price, that means retail traders are booking profit. It's a normal human tendency, and especially with us retail traders, that as soon as we get 15 to 20 points of profit, we exit from the trade. This option chain will tell you that you are in the right trend and you should continue to hold your position for maximum profit. Rest we will continue in the next video. Hope you understand the concept. Do like, share and subscribe to this channel. Remember, option sellers have limited profit and unlimited loss, and they are mostly bigger players, and option buyers have limited loss but unlimited profit, and mostly option buyers are retail traders like you and me. Thank you for your patience. Have a good day.